So welcome everyone. This is the first panel discussion of the day here at FinTech LIVE London 2023. We've had a fantastic start so far, and these roundtables invariably throw up some interesting conversations. Now, rather than everybody agreeing with each other, I'm hoping that there is going to be some degree of debate and discussion. As I said earlier, we are opposite the Houses of Parliament, a place where there's always plenty of debate and discussion, not always as eloquent or sensible as the ones we're going to hear here today. But if anyone has any questions in the audience, if you want to put your hand up, we'll try and take some questions from the floor as well, time permitting. So please do feel free to get involved. If you're joining us remotely, you can send questions through and I'll receive them on my iPad, and we'll try and keep the conversation flowing as much as possible. So I'm just going to introduce or reintroduce some members of the panel here for the Digital Ecosystems Forum. This is certainly a challenge for my pronunciation skills, so bear with me. If you see some pained looks on some faces, you'll know why. Immediately to my left, we have Matthijs van Voorst. He's Strategic Partnerships Director at ABN AMRO. We have Ayca Tunc, Vice President, Head of Banking and Capital Markets at Genpact. We have Venkatesh Varadarajan, Partner Financial Services and Insurance at Infosys Consulting, and Gabino Roche Jr., Co-founder and CEO at Saphyre. Please welcome your panel. Thank you. Okay, now as we're all aware, digital ecosystems and partnerships are crucial in the fintech landscape, as new entrants and established firms alike are seeking to collaborate, innovate and leverage advanced technologies to improve the end customer experience. So today we're going to touch on some of the key opportunities and also the challenges in creating effective digital ecosystems and partnerships, as well as some best practices and of course those all-important successful use cases. So I'm going to start with Matthijs first. What are the key success factors in creating and scaling digital ecosystems and partnerships, and how can organizations ensure alignment and relevance across such a diverse stakeholder group?
Yeah, thanks. So for us as a Dutch bank, we are quite direct, I would say, maybe even a bit blunt in our communication, but I think it could help to manage expectations. So when we collaborate with partners, I want to make sure that we are aligned. Do we achieve the same goals? Are our ambition levels realistic? Because if not, you will get some nasty surprises probably. So that is really crucial for me. So if we align on the ambitions, it also makes it easier for me to align internally. This is the plan, this is what we want to achieve. Is everyone on board? So in the area of innovation, when collaborating with FinTech, of course, there will always be surprises. It's innovation, right? But at least we can minimize it. So that's one very important point for us. Clear expectations, clear internal and external alignment. And maybe the last point I want to address is ultimately, after the contract is signed, it begins. So partnering is probably a very quick way to launch a solution, to launch a new proposition, but there's actually work to be done. In order to scale, both parties should put effort in it. So this is my view, basically.
Well, you feel very much like you, in most of those conversations you're having, you need to take control of that conversation. Like you said, you can be quite blunt sometimes in terms of the messaging. Yeah. There has to be some clear expectation and being transparent about how that partnership works.
Yes, so indeed. So very often we start very small, doing a small pilot, basically to learn. What does the client like it actually? What is the conversion? Are clients willing to pay for it? That can be an input for a business case. But if you have the idea, okay, this will be massive within 3 months, you're not aligned. So yeah, indeed, we have to be clear. Both parties have to be clear on what is realistic. Yeah, and then it's easier to guide the partner through the complex organization which a large bank is ultimately.
Same question to you, Ayca. Are you finding you're guiding your partners?
Absolutely. I mean, let us have a look at the definition of partners, right? Why partners? Why the digital ecosystem? And at Genpact, I tend to think of almost a triangle when we speak about partners. It's typically our clients, which are financial services institutions or fintechs. It's quite often platform providers, such as the hyperscalers. It can also be a Finastra, it can be a Salesforce or ServiceNow. And then the third party, obviously, is us as Genpact, as a service provider. And one thing that tends to get forgotten quite often is, why do we get together? Yeah, why is it that we get together? And I'm very, very specific when it comes to the topic of solving a problem. Yeah, so at the end of the day, you either have to fix your customer experience or improve on your customer experience or user experience. So that's the reason of getting together. And then once you have the broader vision, once you know what it's about, it comes down to people, process, and technology. And there, I think you have to be very, very clear on your vision. What is it that you want to achieve? You need to walk the talk. The senior management needs to be aligned. And yeah, you need to go for it.
Venkatesh, are you going for it when it comes to partnerships?
Yeah, I think for me, the critical success factors of a good digital ecosystem is all about the what, the how, the enablers that make this successful, and most importantly, fourth is the value realization model that binds all of this together. The what is about putting in upfront thought as to where the ecosystem will add value and where does it make needle-moving change to, let's say, customer experience, or the proposition that you have, and automation, and thereon overall reducing cost to serve, so to speak. And that's where I think banks, insurance firms, fintechs would need to look at the customer from an end-to-end standpoint and look at and not be bound by historical boundaries, right? So let's say if it's mortgage lending, don't look at it just from a mortgage lending perspective. Look at it from an end-to-end home buying experience, right? From finding a property down to closing it, to the mortgage lending process, to relocation, to home improvements. Or credit card companies do this very well, wherein they look at it not just from cards, but also surround industries like transit, ticketing, loyalty, travel and lifestyle, hospitality, etc. thereon. So that's the what. The how component of this is about stitching together the alliance model. What are the components of the alliance model? What's the shared vision you need to work towards? What's the risk-reward framework? Where's the supply going to come from in the form of SMEs and etc. And how you're going to execute, test and learn, big bang, etc. Out there. The enablers is all about the organization construct and culture, because the historical construct of, let's say, internal control and having it more control focused doesn't work in a partnership model. You've got to have that win-win construct and a far more collaborative organization out there. And finally, and most importantly, is the value realization model, which is essentially how are you going to realize value through this whole process? What is the business case? What are the quick wins? And what are the long-term benefits? And everyone needs to be aligned. And you spoke about organization alignment and alignment across partners. This is the single biggest important thing as to getting everyone on the same page as to how value will be realized over a period of time. So in summary, it's about what, how, enablers and value model thereon.
Okay, looking along the line here, I see a lot of nodding going on. Gabino, do you have an alternative view, or do you feel that what we've heard so far is correct?
Do you want to make this fun?
That's down to you, my friend. I'm asking the question.
So I'm in agreement with everyone on the panel here. There's an invisible thing no one's actually pointing out. And our company has lived this, right? Stephen and I. You have to understand we're humans. Human nature means there are selfish interests at play. So you always ask, these all sound like great things, that the leaders of some of these financial institutions will bless it, and you can walk the talk, Ayca's right, and I think there are a lot of good people trying to do that. But what do I mean by selfish interests? Let's give you concrete examples. Every one of the financial institutions I work with have their own internal technology teams who want to keep their jobs, okay? I worked at one bank, and I thought the world worked like that bank. Then I worked at a consortium, and I saw multiple banks working very different ways, and the data was completely disparate. And so people that work within one firm and that four walls of that firm don't understand necessarily, in all cases, how it spans across to other firms so they can create this seamless digital ecosystem, okay, there are likely to be resistance to change, to collaborating. They'll say the words, you'll do a small pilot, Matthijs, right? You'll validate it, but then it takes forever. Second, you have executives that'll bless this, but they're ivory tower. They're away from the day-to-day, and the middle management's in between. So they'll actually bless the direction, but where it actually matters is with the team and whether they're truly empowered and whether the team is actually aligned to the vision and the partnerships that we talked about. So that's another piece that needs to be addressed. Third is, even when you get those things aligned, and let's say those interests are at play, if you were there, if you guys heard our talk earlier, I talked about all these different account IDs that are used in the finance industry. And some of them, it's two different account IDs, but they're really just, you know, let's say Bank A uses this nomenclature. They'll call it, I don't know, ticker, someone else calls it SPN, someone else calls it monikers. They're all the same identifier, but a technologist doesn't understand business purpose. They rely on the business to tell them. And if you don't explain it and aren't there, they'll actually wind up duplicating fields when it's really one field, just called two different names, tomato, tomato, potato, potato. They'll think it's actually separate fields. And now you're not getting that digital ecosystem because it's not truly mapped and no one knows what happened. And then no one's going to take responsibility for it because they'll say, I was told to do it this way. The last bit is existing vendors and partners out there who are looking to make money, okay? They got to make money. And so sometimes, I will tell you, some of these big institutions, they spend more money internally than if they went with a vendor. But at the same time, they don't want to pay the vendor what they're owed, even though they're spending more internally, because they don't want to be beholden. And a big open secret, I'm not saying anything that's not actually widely discussed behind closed doors, is Bloomberg. They're probably, I have nothing against Bloomberg. I think they're a good company, but some of the banks are afraid that they're getting gouged in terms of pricing because they have such a hold on the market, okay? And so they take this attitude with partners to restrict the controls, but then those vendors, those platforms can't grow in the way that they need to and really partner in the good way because that's also at play. So these are the things that I think, we call out the elephants, not one, but the elephants in the room. And then you have champions within these organizations who want to make change, who are empowered to actually make it, who can change the status quo. Then you can get to this seamless digital economy.
Anyone else want to comment on these elephants? No, you're playing very safe. Okay, right, I'm going to move on to the next question. Ayca, I'm going to turn to you here. Gabino just mentioned there, you know, we're all trying to make money, right? How can the effective use of data analytics and AI enable value creation?
Yeah.
And help build long-term partnerships with clients and businesses, which ultimately delivers the money that Gabino's talking about?
So I think bringing data and AI and nowadays generative AI together has a tremendous potential in the market. And I'm based out of Frankfurt, Germany. So in Germany, we tend to be a bit behind the market trends, as always. But we just started having these discussions. We see the first deployments with our clients. And I think it's amazing. To give you a few ideas or a few use cases that we have deployed, with the use of a generative AI, you can start doing hyper-personalization. You can improve your sales ratios. You can have back office implementations to increase your self-serve ratios and reduce your back office costs. You can go into fraud detection. You can have better customer onboarding cycles, reduced average handling times, and hence reduced back office operation costs. I think I have a list of 55 IT and operations use cases which we currently deploy. And if you look at the banks we're talking to or fintechs we're talking to within Europe, the only reason when there is no deployment or it's not moving forward, it's either, as you said, we are humans, it's the mindset, or it's data security and regulations. So that's my 2 cents on that topic.
Okay, Matthijs, same question to you, really.
Yeah, what I saw is, at least in Europe, right, and in the US as well, in a different version though, open banking open finance, I think it has allowed for a push, at least, to make new use cases on top of data. Whether it's forced or voluntary, it doesn't really matter. So my view is you have a couple of stakeholders, right? You had the banks, for example, who owned certain data, for example, transaction data. And then there were the fintechs who had the interesting use cases building on top of this data. And some parties in the middle, platforms or aggregators. So I think this is quite an interesting development, and there you saw use cases such as cash flow forecasting, aggregating data from ERP systems, but also from the bank, allowing business clients to get real forecasts. That's one. We saw holistic overviews of wealth, including private assets. I think that's quite important as well. And then this moves into the domain of embedded finance, probably. It might be a bit of a cliche nowadays, but still important. So for us as a bank, I think either we curate access to a number of partners who then can offer their products, for example, a lending product. We work with some great partners, also present here, so I'm happy to make some intros off stage. But sometimes the bank is just not the platform to be for a client. And perhaps we can plug in our lending products in a ERP system, to give one example. Perhaps this is where the client wants to take out a loan. So, yeah, in short, my view, I think open banking, open finance pushed, and now we are seeing more advanced voluntary use cases arising, all driven by data. In terms of the AI part, yeah, for me, I think this is really for the fintechs. They're doing a great job in embedding AI technology in their propositions. Yeah. And for us as a bank, it's really interesting to partner with those companies who found an interesting use case.
Okay, well, let's ask one of those fintechs. Are you doing a great job embedding AI into what you're doing, Gabino?
I think so, humbly. I think that the AI component is an umbrella, something we've talked about in the past at FinTech Live. You have automated intelligence, and then you have artificial intelligence or machine learning. I'll give you concrete examples that Saphyre employs, right, to help the audience kind of follow. You know, you have a number of institutions looking to trade on a fund, but if you're looking to trade in India, Brazil, and whatnot, you have to have that custodian account up to date. If you haven't submitted your tax forms in time, you're not going to be able to trade in that market. If you did not submit your complete tax forms, you're going to pay a higher tax rate. So these are things that we actually automate now for our clients to let them know in advance. Are you paying the standard tax rate? You're going to need the preferred tax rate before you actually trade. Are you able to trade in that market, or is that market now closed to you because you haven't kept it up to date? This is really important because these big institutions do one trade. So if you heard the talk earlier that we gave, I talked about those Apple shares. You might buy 1 million Apple shares in one shot to get the best price. But if you're a big investment manager, you might be managing the Microsoft pension fund, the Coca-Cola pension fund, the Walmart pension fund. So after you bought those Apple shares, you'll allocate 10% to the Coca-Cola, 10% to the Microsoft pension fund, 10% to the Walmart pension fund, because you don't want to trade 10 times and not always get the best price. But for every one of those funds, there are rules that are set up. So I'll give you another example of real machine learning, right, where you have contractual obligations against each of those clients. One maybe, and these are all fabled examples, okay? These are not real examples, but one with Microsoft, one with Coca-Cola, one with Walmart. And in those contracts, you know, they'll say, you can't trade in Brazil. Stay away from Russia and Ukraine, right? No Russian rubles on here, or conversions on them, or not even that, but if you fall a certain threshold, if you fall 20% on your net asset value and whatnot, you cannot trade on these accounts anymore. When COVID hit, every single fund was hit by the market, okay? They dropped in value. There's something called NAV termination events, net asset value termination events, meaning those banks that you trade with based on ISDA, derivative agreements, or GIMRAs, right? You cannot trade with those counterparties. You know how they were managing it? Spreadsheets. Spreadsheets that they looked at the end of the day, and you may have already done those trades and allocated and settled it, right? But now AI can interpret that, automate it. you get your NAVs in every day, you will know proactively whether you've hit the threshold so you don't trade and have those mess ups. And the other component about this, because people will say, wow, okay, well, we're removing a ton of like labor copy and paste activities and spreadsheets management, true, but new jobs are being created too on the back of it because you have to consistently clean and monitor the AI and the data. So it's not like set up and let go. You know, there's always new ways of looking at it where you have to actually keep a pulse check to make sure that the machine is learning and keeping it up to date and accurate.
Thank you. And Venkatesh, to you as well. I mean, are you starting to get a bit tired about talking about data and artificial intelligence all the time as consultants?
No, not really. I think, look, the whole, one of the key objectives of setting up digital ecosystem is to deliver superior customer experience, you know, ensure better personalization of products, have better automation, reduce cycle time, and importantly, do all of this with reduced cost to serve, right? And when all of these are spoken about, data and AI plays a very central role, in fact, a very pivotal role out there. And this is about both in terms of an input to the ecosystem, in terms of figuring out what are the various opportunities there are, what are the various propositions, and also an output from that, because once it starts getting its tentacles into multiple areas, multiple industries, you get more data, and then that, if mined effectively, can result in better understanding of customer and then better personalization of products. So clearly there is huge opportunities, and I fully agree with all the use cases that have been spoken about so far. But there's one watch out here, and this is something that we're hearing a lot of our clients speak about, is there are places where data and AI, and especially Gen AI, plays a role and can deliver material advantage, but there's equally some cases where you don't really need them, thereon. So you got to be very clear as to, especially Gen AI, because it's a new concept. There is no history around it in terms of proven history. So it's very critical to identify the use cases as to where it actually delivers material value advantage, and then go ahead with that rather than applying AI and Gen AI everywhere, basically. And this is something that we're seeing a lot of our clients speak about, saying, tell me where this actually works and how is this any different from, let's say, legacy machine learning models or data models thereon. So what's new about Gen AI thereon? So that's one watch out, but otherwise the opportunities are across the stack, be it in banking, be it lending, be it cards, mortgages, etc., be it insurance, where this whole concept of parametric insurance is really helping in process claims far quicker. So opportunities are huge out there with the concerned watch outs.
Yeah, if I can just add one more thing, because some of the Gen AI is open AI, is the name of one of them, and in the finance space, that's a no-no, guys. So you can't have that information be shared openly on the street because that's financial information that then is no longer secure. So that's one example. The second is the AI is wrong. It is not always right. It makes mistakes because humans made it. And if you don't stay on top of it, it's not, like I said, a set up one and done type of experience. So part of the best practices that we go, and I agree with you, it's not like you set it up and you automate your entire processes. It's these very targeted scenarios, and you need to have a safe, like let's say, playground that is private. If you're going to use it in finance, it cannot be public. It can be a private setup where you can actually ask me specific questions. It's not maintained in memory. It basically answers the question for you and then forgets it, right? Because then you can actually maintain the security around it. So those are just other examples.
Yeah, I was going to come around onto security now, and obviously, regulation is key to all of this. So, Venkatesh, staying with you, actually, how can regulators facilitate and manage these ecosystems and partnerships between traditional financial institutions and fintech companies to ensure that we still have the competition, but also the security as well?
Yeah, I think once digital ecosystems come to being, whenever they start straddling across multiple groups, and in certain cases like credit cards, it goes into multiple industries as well. Managing risk becomes a very critical imperative, out there, because obviously you've got issues around multiple industries playing a role, multiple parties playing a role, and it starts spawning its tentacles across the park. The second is, of course, data security. There are other imperatives around, data privacy, identity access management, cyber regulations out there. And obviously, the regulators will start looking at it, in further detail. They already started with the AI part, with the whole AI Act. I mean, just last week you had the AI Safety Summit in London as well. In the US, there are, all these executive orders that have come from White House around, AI. But the key thing is to maintain a balance between making sure regulation happens, but also ensuring that innovation is spawned through this ecosystem, because the whole objective of these is to bring more ecosystems into play, bring more fintechs into play so that it delivers a superior, customer experience out there. And that balance is critical because, the bigger banks and insurance companies have their own strengths with, regulation and managing regulators being one of them, but equally the fintechs have their own strength in terms of bringing to bear more innovation into the mix that delivers superior customer experience. And the regulators have a challenge in maintaining balance across the two. What you don't want is having a whole host of regulations put in, and then most of these banks and insurance companies have huge amount of programs and focus in maintaining those regulations and maintaining the deadline rather than, getting into innovation thereon. So it's a fine mix between the two, which I'm sure over a period of time they will find out here, basically.
So it's a balancing act. And Ayca, would you agree with that?
I fully agree with everything you said. The only point I would like to make once again is that regulation shouldn't stop innovation. Yeah, there should be a framework. There can be regulatory sandboxes, but still there has to be room for innovation and improvement. And what we see with many financial services organizations is that they're so occupied with the regulatory side of things that they spend less and lesser time on innovation and, again, customer experience and user experience. Yeah, so it's a thin line, it's a gray zone we need to be aware of.
Okay, moving away from the regulation side of things, Matthijs, what role do you think that industry associations and thought leaders play in fostering and building trusted and innovative partnerships within the fintech ecosystem?
Yeah, for me, it's really simple. I think as an industry or as a community, we should be transparent on best practices. Of course, we can't share company secrets, but high level, why not share these best practices? Be transparent, be honest. What is going well? What is a success story? What did not go well and why? Because we also like making a market together. So I think, conferences such as these are an excellent platform to share experiences, to have a coffee, to be inspired with the fintechs themselves. They are taking the risk. They are the real entrepreneurs. For me as an employee of a bank, it's a rather simple job compared to the real entrepreneurs, and I'm very aware of that. So that's something I like. I also see some new use cases emerging around sustainability, cross-industry with telcos or energy companies. So I think it's interesting just to mingle and share. So that's my focal point. Yeah.
Okay, Ayca?
I think the mingling, sharing, networking side is clear. What I would like to highlight is the whole part around training and education. For example, I mean, if I look at the last months when the whole Gen AI hype started, and, or just to give you an example, like last week I was speaking to a global CIO, Chief Information Officer of a very huge financial services firm, roughly 30 billion in revenues. And the discussion was on Gen AI, and the discussion was, okay, Ayca, would it be possible to look at low-hanging fruits, identify some quick wins, use cases we could immediately deploy? I said, fine, let's do that, but did the training and education side of things happen? Oh, no, not really. I just asked my teams to run a hackathon next week, and we'll see and we'll get there. So I think in today's world where our attention span is really not the way it was probably 10 or 20 years ago, the part around training and education is something I believe is very, very important and should be clubbed with the industry association side of things.
Venkatesh, do you agree with that? We need more training and development as well as a drive by the industry associations?
Yeah, I think industry associations, thought leaders play a very critical role out here, right? In terms of identifying those opportunities for, where ecosystems can play a role, better propositions, and also in terms of, all these startup hubs and innovation hubs that need to come out in terms of not just London, but outside as well. A good example of where this has worked, industry associations, thought leaders, is interestingly in India. In India, 2016, there were some critical initiatives there. One was the demonetization drive, which means that the government overnight withdrew certain currency notes to prevent corruption and black money. And second was the launch of Unified Payments Interface, or UPI, in India, that facilitates real-time payments. And what that has done is a huge amount of focus on digital payments and huge rush in terms of that. And that has spawned a huge amount of fintech activity. I mean, currently there are 7,000 fintech startups in India, and the ROI from fintech investment in India is close to 30%, which is double of what it is in a lot of the countries. So the government, industry association, thought leaders have all worked with the banking ecosystem to drive this drive towards digital payments and actually spawn off a whole amount of fintech activity. So that's an example of where it's kind of worked there.
Gabino, industry associations, have they worked for you?
They do actually, because that's where firms understand how things work outside of their four walls. So the associations, those partnerships actually help. I think Ayca was correct around the trading and education. There are too many. I mean, in finance, quite frankly, we say fintech, but most of finance has been run like to meet the numbers and just set things up and go. And the whole innovative R&D aspect of it is kind of lost. That's why there's such an opportunity for fintechs. That's why so many of these financial institutions invest in them, because they can't do it well themselves. And the culture doesn't always enable that in every financial institution. But I think around the leadership question, there's a real important component around evangelizing how to do this. I think there are thought leaders that, there's plenty of them in finance, but to really get them up to the upper echelons of the global chief information officers, the CEOs, to kind of say, hey, you should pull these partners in, Genpact and others, right, to kind of see what's going on. The associations, that we participate in today, kind of help open eyes and give us an opportunity to kind of show our wares. And then one more little final point around the regulator part, because regulation is, in the talk that we gave, is helping to create this real-time environment. But it's a double-edged sword. Most times, a regulation is imposed because there have been a ton of lobbying, and then there are firms that take advantage of it and bastardize the intent. The spirit of the regulation now has been abused, and a lot of times you'll see, at least in our space, I think if you heard my talk again about the different account IDs and mapping and not being able to translate, everyone screams standards. They want to use the stick to punish people. In reality, if you have thought leaders promoting things, the right concepts, in not being ivory tower, connecting with their teams, we call out those elephants in the room, then you're getting the real innovation, then you're getting that change, and you can use carrots, right? We don't have to worry about the sticks.
I think we can all agree a carrot's better than a stick, can we?
Yeah.
I've got smiles, that's good enough for me. Okay, we've talked a lot here about the positive aspects of partnerships, but obviously it'd be remiss of us not to talk about some of the lessons that we've learned from failures in digital ecosystems and partnerships, and how organizations can mitigate the risks associated with them. So, Matthijs, we're going to pick on you first here. Let's talk about some of the failures, and what's your take on the lessons that we can learn from those?
Okay, so a couple of remarks. So first one is I'm running a partnership team, so I'm biased, but I think partnering is very elegant if you want to bring something to the market quickly. So we are now able to launch a simple pilot with a real proposition live within 2-3 months. And I think for a bank, that's relatively fast. But in some cases, partnering is just not the way forward. Perhaps you need to develop something yourselves. Perhaps you need to do an acquisition, an investment. So it's not the holy grail. It takes time and effort to scale. And yes, we have seen a number of partnerships that didn't really come to fruition, right? So as one of the main banks in the Netherlands, we look at what are the main problems our clients face. And sometimes, for example, in the SME segment, our clients face a problem in attracting personnel. or addressing cybersecurity issues. So we thought, well, this is interesting. Why don't we offer these solutions to our clients? In some cases, it works well. For example, in the area of sustainability. For example, in the area of cybersecurity. In some cases, it doesn't work well because the bank just doesn't have a right to play. So then we worked with this HR company who was doing great. They were growing each quarter. But we were just not the right distribution partner for this particular solution, even though it was a huge client problem. So this is, I wouldn't say failure, but it just didn't work. And that is also part of innovation. And then maybe one final thing. Now also in these macroeconomic conditions, it's sometimes tricky, right, to work with early stage startups. Perhaps they are not well funded. So there's always a clear balance between allowing the process to go fast, not hampering them with all kinds of risk procedures. And on the other hand, yes, if you really want to push a new proposition to your client, you have to make sure it's a relatively stable partner. You have to know where they will keep the client data. It's important. And I think we have all seen cases where this was not well managed with all the risks involved. So this is my take. Yeah.
Okay. Ayca.
I think, to sum it up, it's probably poor due diligence, and it's, poor due diligence on the data security aspects or the aspects where you could have a failure. Statistics say that 75% of all digital transformation initiatives fail, and these involve obviously partnership ecosystems as well. Is it the people on the ground from the client side or vendor side? I don't think so. I think they need guidance. Is it the processes? Typically by today, the processes that have been set up are optimized and are well. Is it the technology? I don't think so. These are typically world-leading technology platforms. So what is it then? I strongly believe it's a lack of vision and a lack of alignment and lack of C-level sponsorship, which can lead to those failures.
Yeah, I think I agree with Matthijs and Ayca that there is a large failure rate of these digital ecosystems, especially in the first few years of the launch. And the reasons are not hard to come by. First is that they fail to address the core business problem out there. What's the proposition that it is solving? What's the value model out there, for setting up that ecosystem? The second really is the configuration of the ecosystem. Have you tied up with the right alliance partners? Second is, do you need an ecosystem? Matthijs mentioned, can you do it in-house, or do you really need to partner with others? The third is really this culture of internal control, and the governance that exists. Once you get into that ecosystem mode of having partnerships, your whole internal organization construct needs to change. It has to be far more collaborative and less control kind of focused. And thereon, the last is really, like I said, while speaking about critical success factors, is a strong value realization model. What's your path to value? Because these ecosystems take a long time to set up. And then once they set up and settle, they scale fairly quickly. But you've got to keep the quick wins in mind as well as long-term benefits in mind and ensure that everybody is brought into that shared vision out there. And lack of that linkage to the proposition, to the value levers, operational levers, and finally, your shareholder value parameters like increased revenue, reduced costs, managed capital efficiency, and finally to the shareholder value is what leads to confusion and then these alliances breaking down thereon.
I think there's parallels between Venkatesh and Ayca's points, right? They kind of they connect to the points that I mentioned before with the elephants, right? Like if you don't have that connection with the senior leadership, they're disconnected, right? You're not going to get that change. And that's where it happens. And usually these digital ecosystems is a long-term game plan. It's not a short one. And so the tolerance for any type of failure is so small, and some of these larger corporations, they're used to being very, sanitized and medical about things and just say, oh, well, it's failed. And they don't understand this is not scientific, it's part of an art form, all right? It's a combination of art and science. And so most of these digital transformations, these ecosystems follow, at least they intend to follow, more of an agile path, right? Where you're iteratively figuring out the approach and the solution. Too many are trying to build a house, like in the traditional way. A house, you got a blueprint. You can say you need 2 weeks to pour the concrete, another 2 weeks to build the skeletal structure. You have the vision in mind, but these digital transformations, ecosystems are intangible. You can't see them, you can't feel them. You don't have wood to measure, you don't have concrete to pour. So when you ask everyone, well, how long is it going to take you to do that and that and that? Everyone's magic number is 2 weeks. So you have 2 weeks, 2 weeks, 2 weeks, 2 weeks, 2 weeks, 2 weeks, and they create this big plan. And then all of a sudden, halfway through, you realize you're never going to meet the 2 weeks because it took longer, but you didn't replan the whole time. And that's why, in an agile sense, you're readjusting to say, hey, are we still traveling in the same direction? It's like checking the winds when you have the sails and you're adjusting them so you're going in the right direction if you veered off course slightly. And so there needs to be a tolerance for some failure without using the first failure as an opportunity to say why this won't work. From personal experience, I was coaching a team, this is way before I started Saphyre, and I encouraged, and we were doing Agile, and I encouraged, I'm a product manager by trade, okay? And product managers, chief product officers, are mini CEOs of the company to help build innovation. And I encouraged this one individual to go into the room. He did a lot of homework, and I said to him, you're gonna make this presentation. He's like, oh, but I don't know about this, I don't know about that, I don't know that. I'm like, that's great. You're gonna say it to the room, and let them tell you the feedback, because that's the point of the meeting. Okay, that's why we invited everyone to give feedback. And everyone was pretty good with their feedback. It wasn't perfect, which is what we anticipated. But there was one individual completely, which I anticipated was going to be especially harsh. He was throwing his darts, and I could tell it was hitting the guy in the heart, and he was like feeling destroyed. And I allowed it to happen, because I think it's good for people to feel it, because they'll recover. And then at the very moment where you know, the guy I was coaching who worked for me, I could see by his face, he already felt like, oh, he shouldn't have presented. I said, no, hold on. I was about to say his name. I don't want to say his name. But, and I said to the individual, I said, thank you for sharing your contributions in this room. He's like, you didn't think of everything. You didn't think of this. This was the kind of feedback he was giving. I said, that's great, that's great. I said, that's the purpose of this meeting. Because we don't have all the answers as a single individual or even one team in the organization. We all have the answer. So if we came in here with the perfect answer, we wouldn't need your feedback. We would just tell you we were right. But thank you for showing us where we were wrong. We're only 2 weeks away from fixing that and bringing it back to you. And I think that's the attitudes when we talk about leaders in organizations or in the industry. That's what we want to cultivate. It's only if there's a cacophony of failures should you stop. But if you're able to take that feedback and nimbly switch to and pivot to where you need to go, that's the way you want to build a company.
Anyone else got anything to add?
Not from my side.
I think that's a perfect ending to a fantastic session, really insightful. Thank you very, very much, Matthijs, Ayca, Venkatesh, and Gabino. Thank you.
Thank you.
Thanks, guys. Really good. Thank you.